Hi, I'm John Ross, technical trader and analyst at Banyan Hill Publishing. The short story is this: be careful in September, but be ready to back up the truck because by the time this month runs its course, I think we'll have been given a very good buying opportunity. To show you what I mean, check out this chart. This is the 20-year average performance for the S&P 500, and it's basically a month-by-month breakdown of how the S&P 500 has performed on average in any given month over the last 20 years. Now, since we're in September, I think it makes sense to look at September so we can get an idea of what's to come for the rest of this month and the months that follow. So, on average, in the last 20 years, the S&P 500 has fallen 0.7% in the month of September. This is not a big move in and of itself, and really it's not even a drawdown one should be worried about in their trading account. However, it is indicative of an historically weak month for the S&P 500. So that means maybe we should think about why. Continued bickering and back and forth from China and the US on trade, sanctions being slapped on Iran and Russia, emerging market currencies under pressure because of a stronger dollar, and those emerging market economies and stocks under pressure because policymakers are trying to react to the currency weakness in order to fight off inflation. All these things feed back into the bigger global macro picture and feed into the stability of the global financial system and financial markets. Now, those are just some examples. Certainly what's going on this September. But it's a dynamic that maybe we should keep in mind as we go throughout the month and follow price action, look at patterns, and try to determine when we might be given an opportunity. Because ultimately, I think that's what this is. I think September is going to give us an opportunity to get in to stocks that we don't already own, to add to positions that we already own, and give us the opportunity to get positioned ahead of what is historically a very good stretch for the S&P 500. Take a look at the chart again. The fourth quarter has been a very good stretch of time for the S&P 500 over the last 20 years on average. Now, this is not something that I want you to miss out on. Of course, we have to keep in mind all the macro risks that are out there. The fact that many indications are lining up to suggest that a recession is near. Now, I've talked about a recession in today's article. I've talked about it a few times in Winning Investor Daily over the last couple months. I agree that a recession is coming, but I don't believe a recession is imminent. I don't believe a recession is going to begin tomorrow or next month. I think at the earliest, a recession may start to materialize. Some of the signs may start to show in the first quarter of 2019. But even then, it might be still a little bit early to expect recession to really land and hit the U.S. economy and sort of work its way through the global economy and the global financial system. So I want to be aware of that. I want you to be aware of that. It's always important to keep our eyes on the big picture, on the horizon, so we know that if there are some dark clouds building, they're not going to sneak up on us and just soak us. So in the meantime, as we monitor that bigger picture, those longer term cycles, the business cycle, credit cycles, we can use seasonal cycles like the one in this chart of the S&P 500 average performance. We can use behavioral cycles, the types of things I like to watch in price action, price patterns and such. And we can use that to make good money, to make good returns in short amounts of time as these larger term cycles and the bigger picture sort of does what it does. So I don't think it makes sense to take unnecessary precautions just yet. There's opportunity to profit still. There's opportunity to grow your wealth. And as always, we'll be here to help monitor that with you and for you. We thank you for listening to this. Hope you're able to take something away with it that gives you some bearing as you make decisions about your trades, about your investments. And as always, we'll talk soon.